Hello everyone, welcome to Global Online. Just give me confirmation. My audio is okay, video is okay, screen is visible to you. Once you give me confirmation, so we can start. Let me check. Hello everyone, welcome to Global Online. Just give me confirmation. Okay, audio is okay and my voice is also okay. If you find any error or any kind of noise, please let me know, so I will sort it out. Okay, so students, very warm welcome to our Global Online. So today we are with a session of day 6. Okay, and those students who are preparing for the UGCNET June 2025 for the commerce and the management. So here we have with our Maha marathon session. So this is our day 6 and I am Dr. Swati is here. So let's start with the today's session. The first question which is in your screen, this question is from your business finance. Okay, so the first question is a capital budgeting techniques through which discount rate equates the present value of the future net cash flow from an investment project with a project initial cash outflow is known as. First option is given to you, that is your payback period. Next one, that is internal rate of return, and then your internal rate of return, then net present value, then your profitability index. Okay, so student, this is from your capital budgeting. So there is a right answer will be internal rate of return. So I'm here with your solution, that is what is internal rate of return. So internal rate of return, yeah, as you know, this techniques we are used in the investment budget. So this internal rate of return where your NPV is equals to 0, when your NPV is reached to the point of 0, then our internal rate of return will be calculated. So the discount rate that make the net present value for the future cash flow equals to the 0, that is your internal rate of return. So in the other word, we can say that the rate at which a present value of future net cash inflow is equals to the initial investment. Now what is why IR is important? Because IR helps to determine the profitability of a particular project. Suppose we have a B, C, this kind of 3 projects. So all the projects are profitable, but which project is more profitable? So we can decide with the help of internal rate of return, isn't it? So if the IR is greater than the required rate of return, so in that condition, that means if your IR rate is greater than your rate of return, okay, so in that condition you have to accept it, because it means that your profit is more than what your cost of capital. Now if your suppose your IIR is less than your cost of capital, so in that condition you have to reject it, because this particular project or that particular project will not be cost sufficient or profitable for our organization. So that's why we use over here the IIR, internal rate of return. Now why not the other option we choose in this question? Because when we are talking about the payback period, so payback periods is helps to measure the initial time requirement for recurring our cost. Okay, so whatever, suppose I have invested 5 crore rupees in particular project, so in that condition, in which point of time I recover my 5 crore rupees, so that is your payback period. What actually the cost you had invested, that value whenever you will get back, so that is your payback period. And what about the net present value? So net present value is find out the difference between your inflow and the outflow. So actually it helps to find out the difference. What actually, if our inflow is greater than outflow, so yes, it is obviously it's best for the organization. Okay, and next one, that is profitability index. Whenever we are talking about the profitability index, so measure this is helps to measure the actual ratio of the present value of future cash flow to its initial investment. So this is why we use over here the profitability index. So student, why I am showing these explanations to you, and because this is a way you will get each and every question's explanation that will help you to prepare better. Okay, so I am here, you will get each and every question with like this explanation, so it will helps you for your preparing very well for your examination. So student, that's why I'm here come with the course global on the behalf of Global Online. I'm here with the course of the of commerce and the management, the students who are preparing for the UGCNET June 2025. Now our new batch will be going to be started on the 14th of April, and now this is in 8,000 rupees if you register yourself for the paper 2, either for the commerce or the management. So you will get paper 1 free of cost. Okay, and this is a great opportunity, so you are completely preparing for the UGCNET and the management. Now what you will get over here, so you will get a daily live sessions. If you are not able to attain the live session, so recorded session is also available. Okay, then here you will get complete syllabus notes in PDF format. Okay, and we are adding you, once you register, we are adding you in a WhatsApp group, so we are sending continuously whatever the sessions we are completed and sending that particular notes to you, so it will be helps to prepare very well. Next one, the student, that is we are 100% syllabus we are covering over here along with the revision, and this revision we are taking with the help of PYQs, and on the basis of an analysis of that PYQs we are making some most expected MCQs which are we have seen in your examinations. Okay, so on the basis of that we are taking your revisions too, along with your covering the syllabus and your preparation. Now the full syllabus mock test is available over here, and 4,000 plus MCQs with detailed explanation, PYQs with detailed explanation. Along with that, if you have any query, you can get in touch with this WhatsApp contact number which is given in your screen. Now student, how to download the Global Online? Go to Google Play Store, then you have to just install it, and then you have to go to my course section, and then you have to search it and you have to register it. Okay, once you register, so this is main important thing what we are doing, what are the interface you are showing over here. So you will get unit wise folder, so it will help you for your preparation, and also the recorded session is available, PDF notes is available, mock test is available unit wise, so it will help you to prepare very well, not only for the paper 2, also for the paper 1 also. So let's start with the next question. So here, now this is a practical, this is problem question, like practical question. So here is X limited company has a overall PV ratio of 40%. So already PV ratio is already given to you. Now what they are asking, the marginal cost of product A is 30 rupees. Calculate the selling price of the product A. So how do you calculate it? First of all, what we have PV ratio value. So PR value is 40%. So what is the formula of the how do you solve it? So first of all, write what you have, what is given in your examination, in your question. Okay, so PV ratio, when we are talking about the PV ratio, the PV ratio formula, you know, that is contribution divided with sales multiply with 100. And this question they are asking about the selling price. Okay, so with the help of this, can we find out? And what about the contribution? So contribution is sell price minus your marginal cost, isn't it? So we have PVR ratio, we have marginal cost, and marginal cost is, don't get confused, marginal cost is nothing but your variable cost. Okay, variable cost is also known as marginal cost. Okay, so what we have variable cost, we have PV ratio. Okay, so what you have to do, just PV ratio is giving to you. Contribution means sales minus variable cost divided with sale multiply with 100. So PV ratio we know that is 40%. Okay, so I can write 40 like 0.40 0.40 because the percentage is given, so I am writing over here 0.40. okay. Then as we don't know, but we know the variable cost, so variable cost is 30, and then you have to divide with sales, and then you have to multiply with this. So now the next thing that you have to do, you multiply, this will going to be in multiplication in your left side, equals to left side. So this is 0.40 s is equals to s minus 30. okay. So either you can write like this, either you can write this, s is going over here, okay. 0.40 is equals to s minus 30. okay. So yes, now you have to move over here, so you will get 2s. okay. So there is an there you will get 100. okay. So this is your 40, this is going to be over here, that is your this 40, this is okay. So what happened, so here you can see your value will be 0.60 s, okay, and is equals to 30. Then your s is equals to 30 divided with 0.60. so when you solved it, so s value will be 50. okay. So this is where you can calculate your answer. So here is rupees 50 is your answer. okay. The solution is given to you. So this is the way you can solve your question like this. okay. Okay. And how I know more students having question, from where you got 60, ma'am? So it's simple, because you have to shift the s over here. So this is your 1. okay. From 1, when you less 0.40, you will get 0.60. So from here I will get that 0.60. okay. Now the next one, that is a match the pair question is there. So in the match the pair, there is a sweat equity share, bonus share, right shares, and the buyback share. So this is a very good question, because we get confused many times. What is the sweat equity share, what is bonus share, what is the right share. So let's discuss. Sweat equity share is a kind of share that is issued by the company at discount. It may be for your consideration, but without cash. okay. It's not given in cash to its employee or the director of their company, because their contribution is good for the company. So they issue the sweat equity share to the either to its employee or either to its director, because their contribution is good. So they issue the sweat equity share, but other than cash. So this one. What about the bonus share? So bonus share is a additional share, but this is a free additional share, we can say. This is only given to the existing shareholder of the company, not to the director of the company. okay. So either they give the bonus share in the form of extra dividend also. So this is your bonus share. What about the right share? So when we are talking about the right share, so right share is offered to the existing shareholder in the form of discounted price, which is given before they are offered to the public. okay. And what about the buyback period, buyback of share? So buyback of share is kind of your, when you repurchase, when the company repurchase his own share from the shareholder, because they want to reduce the outstanding of shares in the market. So this is your buyback period. So you can easily mark like now this kind of question. So here what is the share? The list one number 1 is given to you, that is shares are given in the form of extra dividend. So bonus share is giving as extra dividend, so you can match B with 1. So here we can match B with 1 and is also B with 1. So these option going to be cancelled. Now the share issued by the company at discount. So whenever the share is issued by the company at discount, so this is your right share. So you can see is matched with the second one, so this is your right. Then the opportunities to the existing shareholder to purchase the share. So this opportunity is given under the opportunity to existing shareholder to purchase the shares. So this is your sweat equity share. So you can easily mark this question, that is your option number D will be right, that is A is second discount, then B is what with one, and C is with the third one, because third one the right share is opportunity to existing shareholder to purchase repurchase the share, and the buyback, you know that the company's call options to buy the share from the shareholder. Okay, now the next, the assertion is given to you, assertion and reason. So assertion is about the depreciation amount is added back to net profit for calculating fund flow statement, and reason is depreciation is an item of cost but not fund. So what do you will think that what will be the right answer? So see over here, the assertion is true, because the depreciation is a kind of amount which we added back to the net profit for calculating the fund flow statement. Whenever we calculate the because this is happen, the depreciation is non-cash expenses, isn't it? And that's lead to reduce the accounting profit, because we are writing depreciation in the expenses side. Okay, depreciation, and this is actually a non-cash expenses, but due to that depreciation our net profit showing low, and this will going to be adversely affect to the fund flow of the company. So the profit and it does not involve the actual outflow of the fund, so that's why this is true, that is depreciation amount is added back, because we are reducing depreciation from the expenses size on P&L. Okay, from the P&L, and due to that expenses, due to depreciation, our profit will be reduces. Okay, so that's why it is we have to add it back to the net profit while we are calculating the fund flow statement, because in the fund flow statement we have find out the actual outflow of fund. Okay, and what is the reason is giving? So reason is also true, that is depreciation is an item of the cost but not fund. So here depreciation, when we are in accounting, we have write in the expenses side, and this reflect the reduction in the value of asset over the time, but it does not impact on the cash flow directly. Okay, directly it's not get impact, so that's why depreciation is an item of cost but not a fund. So this is also true. So here the right answer will be B. Both are correct, and but this not going to be explained correctly. Okay, now the next one, that is next question, there is a four statement is given you the question, and you have to find out which statement is true and which statement is false. So first statement I'm reading one by one. So here you can see the dividend. First statement, dividend can be paid out of capital profit if only article of association of the company permits. So here this is a false statement. And why this is false statement? Because dividend cannot be paid out of capital profit unless and until because this is unless it is realized and allowed by the law, not just by the article of association, because dividend is allowed or give permitted by the law, not only by the article of association. That's why our first statement, A statement, is false. Okay, so this statement is false. Now the second statement, that is goodwill taken over may be written off out of the profit prior to incorporation. So yes, this is true. Okay, because the whatever the dividend we are taken over, this can be we written off out of the profit we earned before the incorporation. Okay, Now the third statement, this is true. Now the third statement, C statement, dividend can be paid out of current profit in spite of provided depreciation for the past year. So this is false, because dividend should not be paid if there is unprovided depreciation from the past year, as per this is given in the Companies Act. This provision is given in the Companies Act. Okay, so that's why this is false. Now the option number D is capital redemption reserve can be used for issuing the fully paid up bonus share to the shareholder according to the Companies Act. So here we this is true statement, because capital redemption reserve can be used for issuing fully paid up bonus share. Yes, okay, and this is given in this provision is given in Companies Act 2013, which is returnly given. Okay, so that's why this D is true. So here false, true, false, false, true, false, no, false, true, false, true. So option number A will be the right answer. Okay, now move toward, that is next question. The statement select the correct answer from the given code stated which item are current liability. Option number A, payment due to staff. Then option number B, bond redemption after 6 months, advance income and debenture redemption redeemable after 6 months but before 12 months. So what is the correct answer when we are talking about the items related to your current liability? So first let's understand here that all these are item from the current liability. So right answer will be all of the above. Now understand why all of the above. Payment due to staff, so this is your current liability. Okay, because we are writing undue payment or unpaid salary, wages or other payments due to staff. This is your what? This is your short term obligation. Your short term obligation. So this is your liability. Then bond redeemable after 6 months. So this is also your current liability, because since the bonds are payable within the year, they are considered the current liability. So this is happening after 6 months, so but within the current year, so that's why this is your current liability. Advance income is also current liability, but let you understand, when we are talking about the advance income, is this is the income we receive in advance, is a kind of your liability, because company are own such services or the or that particular goods, but in near future they have to pay with interest. So that is, if the advance income, it's kind of your current liability. Okay, then when we are talking about the debenture redeemable after the 6 month but before the 12 month, so in that condition this is also your current liability, because since they are due within the 1 year, before 12 months, it said before 12 months, but that means within the 1 year, so they are classified in the in your current liability, because they are covering the period of short term. Okay, so they cover the period of short term. This is kind of your short term obligation. Okay, so that's why here all are the correct example of your current liability or items of the current liability. Next, move toward the next question, that is, which of the following signify triple bottom line audit? Now, what is a triple bottom line audit? So I'm just reading the options, then I will explain you. First option is financial, environment and the performance audit. Then B, social, financial and economic audit. Then C, social, economic and environmental audit. Then D, cost, financial, environmental audit. So let's understand, when we are talking about the triple bottom line audit, so this is a kind of framework which actually we use to evaluate an organization performance. Okay, we are auditing, or generally auditing, we are use this word to calculate the performance of an organization. But there are the three key important area. That's why the triple bottom word is overused. So these triple bottom, first is social. First is social, that means it's related to your people. Okay, second one, that is your economic. When we are talking about economic, we are considering the profit. Okay, and third one, your environment. Okay, your environment. So environment, that means it's nothing but we are talking about the planets. Okay, so this is your triple bottom line audit. So in the triple bottom line audit, we are considering social, economical and environment. So this is your C answer will be the right answer. So whenever the social or the people, the point at which we are considering the first point, that is people and the social. So in this point we consider or we measure the impact on the society, or on this society is also include your employees well-being, communities engagement and social responsibility. And when we are talking about the economical, so economical, that means we are considering the profitability, we are considering the economic or impact on the fair business practices. So this way. When we are talking about the environmental, so environmental, which include the sustainability in efforts, carbon footprints and your resource uses. So these are your triple bottom line audit. Okay, now the next, this is question. Again, this is problem question. So you have to solve it. So how do you solve it? During the period of 3,30,000 expenses during the period, there is something. Okay, this equation, and the 1,40,000, what will the total asset value? So here the simple is, that means our capital is, okay, this is revenue period, there is something missing, that is revenue during the period. Okay, so revenue value 3,30,000 and your expenses value 1,40,000. so you have to calculate your total amount of asset. Okay, so how do you calculate? First of all, the accounting equation. What are accounting equation says? So assets equals to liability plus capital, that is your equation of accounting. Okay, so here now revenue is 3,30,000. Okay, and expenses is 1,40,000, isn't it? So we have to need to calculate from the revenue. When we deduct our expenses, so we will get net profit. So simple, we have to calculate the net profit first of all. So net profit will be revenue minus expenses. Okay, so 3,30,000 minus 1,40,000. So we will get 1,90,000 is our net profit. Okay, then you have to calculate the closing capital. So how do we calculate the closing capital? For calculating the closing capital, there is an opening capital plus your net profit. Okay, now ma'am, we know that what is the net profit, but we don't know that is what is the opening capital. So your for calculating opening capital, you just what you have to do, whatever your revenue plus your expenses, is it your opening capital. So when you add all to this, that means revenue plus expenses, 3,30,000 plus 3,30,000 plus your 1,40,000. Okay, no, this is an incomplete question. Okay, I will explain you this question again, because here something is missing, that is this is incomplete question. I will repeat this question in the next session. Okay, because capital is not giving to you. If the capital is not giving to you, so how do you calculate your closing capital? Okay, so there is some printing mistake in this question, so I will discuss in the later. Okay, now move toward the next question. Monoposony is a situation. So what about the monoposony? First of all, what is a monoposony? So monoposony, this is what this is when in the market there is an only one buyer. Okay, when in a market there is an only one buyer, but there is a many sellers. So in that condition, this monoposony is we called this situation we call monoposony. So here is what monoposony situation, where there is a large number of seller and one buyer with a homogeneous product, isn't it true? Or where there are the large number of buyer and one seller with a homogeneous product? No, this is wrong, because there is no large number of buyer, only one buyer. Okay, where there are the large number of buyer? No, this is also wrong. Where there are the large number of buyer? Again, this is wrong. So this is our true, that is large number of seller but only one buyer with the homogeneous product. Okay, so A will be the right answer. Now next question. For the following statement, assertion is reason is given to you. The assertion is want a satisfying power of commodity is called utility. Isn't it true? Yes, this is true. We already most of the time we have repeated from the 11 12 that a want satisfying power of the commodity is called as a utility. So this is true. Now the reason, utility may not have the characteristics of morality. So what do you think, this is correct? Yes, this is correct, because utility is a subjective concept and it does not necessarily align with the moral and ethical consideration. Like I will give you the example. Many of the people or the alcoholic having the utility or the want of this alcohol and the alcohol. So they want they when they drink alcohol, okay, so they get satisfied. So this is a utility, but isn't it this is good for the health? No. So that's why utility may not have the characteristic of morality. Anything which satisfy your need, that is a utility, in spite of that is they not include the morality. Okay, so here what will be the right answer? Option number A, because A and both are correct. Okay, now move toward the next one, that is normal demand curve slope. So you know that is simple question, but I am with this question within a what are the causes why our demand curve will be slopes downward. So we know that the answer will be downward. Okay, now what are the reasons? Because of reasons behind our demand curve goes downward, slopes downward. So what are the reasons? So first of all, there is due to the law of demand. Due to the law of demand, actually this state that the price of the goods whenever decreases, okay, so quantity of that goods going to be increases, and this will happen vice versa. So here the two variables, two things are going to in the opposite direction. Whenever the things are going to in the opposite direction, suppose your y-axis is and your x-axis is going through in the opposite direction, in that condition this will happen. That means our whatever the demand curve we have, they're going to be downward slope. Now the downward slope occur because of there are, why this happen with the price and quantity. So there are the things that is we have to discuss, because here you can see there is a price in the price and quantity. If there is a substitute effect, due to substitute effect this is happen, due to income effect this is happen, that means our demand curve slopes downward. Due to diminishing marginal utility, this will happen. When we are talking the substitute effect, so these are the price of, if the price of the product falls, the consumer may switch from the alternate option or the expensive alternate to the cheaper product. So that's why this all things are happen. because of substitute effect. If our income is increases, so purchasing power of the goods also increases, so lower price increases the consumer purchasing power, allowing them to buy more and more product. And our diminishing marginal utility always say that the consumer buy more for the same product, and the additional satisfaction, that is your utility, they get from each extra unit decreases. So these are the reason, that's why our diminishing, our demand curve slopes downward. Okay, now next question. For the following statement of the assertion and reason is given to you. So here the assertion is what? So assertion is given, that is marginal cost and the differential cost do not convey the same meaning in all circumstances. And reason is behind of that, the differential cost increase or decrease due to change in fixed cost. So here the assertion is true, but reason is false. Why the reason is assertion is true? Because in marginal cost actually refers to the additional cost, isn't it? This is marginal cost is here nothing but your additional cost. Okay, and this cost we incur for producing one more unit. If you purchase one more unit, that is your marginal cost. Okay, and where the differential cost is refers to the difference in your cost and cost between two alternatives, between two alternatives. So these are two costs may sometime be similar, but they are conceptually different. So that's why when we are talking the marginal cost and when we are talking the differential cost, do not convey the same meaning, because marginal cost is additional cost and differential cost is give the difference between the two alternatives. You give the value of two alternatives. Okay, now reason. So when we are talking about the reason, so differential cost is increased or decreased due to change in fixed cost. Isn't it true? Actually not, because it's not due to the change in the fixed cost. Actually it's depend, our differential cost is depend on our variable cost, because if we increase the unit of production, if we increase the unit of production, so variable cost is also increases, but there is no effect on our fixed cost. So this difference we cannot calculate on the basis of fixed cost, we can calculate with on the basis of variable cost. Okay, so that's why this is our A is true and reason is not correct. Okay, so here you can see A is true and for R is false. Now the next one, this is match the pair. Okay, so first one, that is indifference curve, second one demand curve, and the perfect competition, then price leading. So you know that this is a simple question. Indifference curve, the curve which is convex to the origin, this is fourth one. Then demand curve slopes downwards to right. Okay, so you can match with the fourth one. Perfect competition, when your price is equals to average revenue equals to marginal revenue equals to demand. Price leadership you can see in oligopoly. So you can easily, this is simple question, but I have added because of your getting revision if you somehow you forget it. Now the next one, that is assertion and reason again. So first one, that is okay, so as a proportion of one variable factor in a combination with the fixed factor is increased, after a point the marginal product of the factor will be diminishing. So here you know, this is a question from the law of diminishing marginal utility, marginal return, sorry, marginal return. Okay, marginal return. Okay, so in the assertion they said, this is correct, they said that increase in proportion of variable factor in combination with the fixed factor will, so after a certain point they lead to diminishing marginal return. So here when we are talking about the proportion of what, one variable factor in a combination with a fixed factor is increases. So after the point of marginal product of the factor will be diminishing. So suppose if your variable factor, if your variable factors is going to be increases, okay, so this will leads to your fixed factor. There is a possibility your fixed factor is also increases, but little bit, okay, not too much. So in that condition, when we are talking about the marginal product, that means additional, if we add one more product in our additionally in a factor, so in that condition if we added one, so it leads to diminishing the factors. That means if I consume, since suppose if I consume gulab jamun, to in each and every unit when I'm consuming, my utility and my satisfaction going to be downward, okay. So that means what, they going to be in a diminishing rate, okay, increasing but in a diminishing rate. So that's why this proportion about the variable factor in combination with the factor fixed factor is increases after after the marginal product, okay, like your, this is your marginal product, okay, this is your marginal product. So here they increasing but in a diminishing rate, okay, this is the way. Now the reason is given, beyond the level of optimum combination the input leads to this. So is this true? Yes. So reason is also correct, because certain point we get a satisfaction, beyond that point our satisfaction going to be negative or diminishing, okay. So that's why the both statement are correct over here. Now next one, ABC, three statement is given to you. You have to find out which statement is true and which statement is will be false. So first statement is giving that is a large number of buyer, and this is question from the economics, okay. So large number of buyer and seller exist in the monopolistic market, isn't it true? So yes, this is true, because in the monopolistic market we see there are the large number of buyer and seller, okay. So this is true. Then next one, firm produce a differentiated product in the monopolistic market. Yes, for though no identical product are produced in the monopolistic market, so all the products which we see in the monopolistic market, they are the differentiated product, that are differentiated. Now the third one, that is free entry and exist form a characteristics of monopoly. So this is also true, in the monopolistic market there is a free entry and exist for the seller and buyer, okay. So this is both these all three statements are true. So here is right answer will be option number C. Now the next question is, the consider the following statement is given to you, that you have to find out which one is the correct one. Now the option number 1, the demand for the necessity is inelastic, okay. So for the necessity goods the demand is inelastic. This is true. I can draw in the with the help of diagram, because in the necessity goods if I want particular things, or the food, water, or either you can say clothes, so these are the necessity good. What quantity we needed, this quantity is fixed. If either we increase our price, either we decrease our price. So that's why in that condition our demand will be inelastic. Here you cannot see there is any elasticity for the necessity goods. So this is true, this is correct, okay. Now the demand for luxurious is elastic. The demand for luxurious is elastic. This is true. When we are talking about the luxurious goods, there is you can see more flexibility. If you increase, this is your price, if you little bit increase your price, there you can see a large number of changes in your quantity demanded, okay. So like your here there is example like your diamond goods, okay, then car. So here there is if you see there is a price is decreasing, okay, if it is declared in the budget. So electronic goods or the for the luxurious goods, if the price or taxes will be reduced, so in that condition the more the people will purchase it. So here you can see the prices decreases, quantities increases. If the price is increases, quantities decreases. So there you can see the more effect on the elasticity. Now the next one, a product which have a several uses has an elasticity demand. So if the product can be used in multiple way, like electricity, like your coal, your sugar, so this is a demand is elastic, because increase in price may lead to consumer to reduce its uses. So for the several uses, if we use several uses kind, you use your electricity in a multiple purpose, okay. So if any product we use for the multiple purpose, in that condition you can see there is an elasticity of demand. So that's why all the example or the statements are true over here. So A, first, second, third, all are the true. So D will be the right answer. Now the next question, total production will be maximum when your TP will be maximum. So here I can draw, this is your MP and this is your TP, okay. So TP is maximum when our MP is minimum, or either we can say 0, okay. So option is given, the margin product is MP is maximum, MP never be maximum, okay, because is like this, okay, is continuously downward. Average production is maximum, no. Marginal product is 0, so yes, a margin, when your margin product is reached to the 0, in that condition your TP will be in the maximum level. So option number C will be the right answer, okay. Now the next one, that is assertion is given, that is price reduction normally leads to an increase in demand for the commodity. Reason, price reduction leads to the entry of few buyers of the commodity in the market. So here this is question from the law of demand, okay. So in the law of demand we can see, that is when we are talking about the price, if the price of goods fall, the quantity demanded of the particular goods is going to be increases. So when we are there is a reduction in the price reduction normally leads to increase in demand for the commodity. So yes, this statement is true, and reason is given behind of that. The reason is price reduction leads to entry of new buyer of the commodity in the market. So yes, why, whenever there is a new innovation, so here you can see whenever there is a new thing, innovations in the market, so the price of that particular product is higher, and gradually, because in that time there will be no competitors in the market, okay. There is no competitor in the market, so here you can see, that is price reduction leads to the new entry or the new entry of buyer in the buyer of the commodity in the market. So yes, these are the true. So here the C, option number C will be the right answer. Now the next question, these assertion, again the assertion reason. So assertion is given, that is only one single primary ratio that measure the financial outcome of all the recorded business activity is ROI, return on investment. And the reason is given, that is in practices, however the variations are also found in the ratio, because capital and return are subject to the different interpretation by the firm. So here you can see in this question, assertion is about ROI. So yes, this statement is true. Why this statement is true? When we are talking about the ROI, return on investment, so this is your key of financial metrics, because ROI we use to evaluate our profitability of the firm and how efficiently we are using our fund for the investment purpose. Okay, that why this will lead to increase the overall business performance of the company. So that's why one single primary ratio that measure the financial outcome of all the recorded business, that is your return on investment, because it's find out your profitability, it's find out your investment, and it's leads to, this will leads to overall business performance. Okay, then the reason is given that in the practices, however, the variation are also found in the ratio, because capital and the return are subject to the different interpretation by the firm. So here the reason is also true, because when we are talking about the capital, so the capital it's kind of your investment, and return it's kind of your profit which you will get from the investment, isn't it? So differently that it leads to the variation of ROI calculation. Okay, so what about your capital is your nothing but what you are invested in the particular project, that is your investment, and return is your profit which you will get from that investment. Okay, so that's why assertion is also true and reason is also true, but you can see over here these are the assertion and reason is not get matched with each other, because assertion is not giving the exact reason, okay, which is given in our question paper. So both are the true but not correctly explained to each other. Okay, now move toward the next one, that is your the current trading cycle practices by the stock exchange in India. Okay, so here is the T plus 2 day, T plus 3 day, T plus 4 day, T plus 5 days. So this is the way. Okay, so first of all, when we are talking about the T, what is the meaning of T2? So T2 is a settlement cycle which is used, which is means that the transaction made on particular trade day, that is T day. Okay, so I settle 2, that means T for 2, this is 2 day, that means T for days. Okay, so this is settled in the 2 day. So whenever we are making trading, or we are doing trading in NSE or in a BSC, so okay, so in that we generally use before we have that in we have T3. We previously in Indian stock market we use T3, T plus 3. Okay, T plus 3 settlement cycle, but after April 2003, the time will be they have decided that they it was a shortened to T2 days. Okay, so this why they do this, because they want to improve the efficiency and liquidity in the market. So why the reason they do this? Because they want to improve the efficiency, and liquidity into the market. That's why they change first. Priorly in the prior days there is a T before April 2023 they follow the T plus 3 days, but nowadays they shorten the period and they consider T plus 2 days for our practicing in the stock exchange in India. Okay, now next the systematic risk. Okay, systematic risk does not include. Now what is the systematic risk? So you know that, sorry, systematic risk is affected to the entire market, and systematic risk is a kind of risk which we cannot control, which is not controlled by company. Okay, this kind of risks which is out of control by the company. Okay, so these risks are caused for the causes because of external factor. These risks are happen because of our external factors. And what kind of external factors? Like if there is a changes economic condition. Okay, if you see there is a change in economic condition, if you see there is a political events, if you see there is a natural disaster, in that condition, because you do not control this kind of thing, so this is called your systematic risk. So you know that market risk isn't a kind of your systematic risk, because this is out of a control. This all market risk is depend on the external factors like a war, political decisions, economic conditions, natural disaster. Okay, internal rate of risk, this is your impact on fluctuation of interest rate, your investment, especially the bond. So this is also your kind of your systematic risk. Okay, this is does not include, sorry, this is way does not include. So no, yes, it's true, I'm get confused. Actually in the systematic risk, this is your market risk which we include, interest risk, this is your kind of systematic risk, and your purchasing power risk is also your systematic risk, because this is happened due to inflation. Okay, inflation. Okay, and but your financial risk, it is your factor of unsystematic risk, because this systematic risk controlled by the company, controlled by the company, because it affects to the internal factor of the company. Okay, internal factor of the company. So that's why option number C will be the right answer. Okay, because it does not include, he said, so market risks, internal rate risks, or the purchasing power risks, this is your kind of your systematic risk, this is out of our control. Okay, now the next one, that is according to the Walter model, firm should pay 100% dividend. He said in the Walter model, he said company should pay 100% dividend if when they pay 100% dividend. So first of all, you have to understand Walter dividend model. In the Walter dividend model, this decision to pay the dividend actually is depend on the relationship. And now what kind of relationship they, so the relationship between the ROI, return on investment, and cost of capital, that means your K. So this is your return, this is the relationship between the R and your capital. Now if suppose your R, that means return on investment, is greater than your cost of capital, in that condition you have to, or the firm should retain, firm should retain earning. Okay, and either they retain that earning, either they reinvest, either or reinvest. Okay, either reinvest, isn't it? Or if suppose the return on investment is less than the cost of capital, in that condition what you have to do, the company should distribute his all the earning or 100% of earning as a dividend to his shareholder, because reinvesting all the generated a low return than the cost of capital. So that's why they decided whenever a return is less than the cost of capital, in that condition Walter said that you have to pay, company should pay 100% dividend to its shareholder, because they do not have sufficient money to retain with self. Okay, and if suppose your R is equals to your K, cost of capital, in that condition you haven't see any kind of difference. So if you cannot see the any kind of difference between your paying dividend or in retained earning, as in that condition both the option, either you pay the dividend, either you retain it. So it's all the option is opens to you. Okay, so here this is the what will be the right answer. Option number C will be the right answer. Okay, so student, I am just ending over here. Whatever the questions we have remained, we will see in the next session. If you have any query and if you like my video, just subscribe my channel and like it. Okay then.